Good morning. Let me get the chat room up and running. I'm so happy, like a room without a roof, whatever that means. All right, anyways, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Coffee time. So nice to meet you. My name is Wayne. I'm the Chief FX Market Strategist for TradersWay.com. Been trading currencies for a very, very long time, and I'm here to be your guide this morning. We're going to go through the New York session, put together some trade plans. I'm going to look at dollar pairs, yen pairs, and gold and oil. If we have time, I will take requests from the audience, and we can go through whatever charts you want. We're getting pretty close to the end of the month, right? It is, what is that? I can't read that. The 29th? So maybe a peso trade too? Zero death, 666, $10. Okay. By the way, how's the quality of the stream this morning? Is it coming through okay for you? Okay. That's a little blurry on my end, but I'm also broadcasting. Wonderful. So without further ado, get on with it. All right, so these are yen pairs, so that's fine. You know what? Let me get this over there. Like that. Let's go over there. Some Aussie? Yeah, I can do that. Morning, Jeanette. Okay, start with the top left. This is Aussie dollar. We're trying to keep it within this range, and this is a big uh-oh. And check this out. Look how important it was that we broke through that. Uh-oh. So this could be a problem to our up. We're right on a technical line here. This goes back to here. You shouldn't be shocked. In fact, was it 3 weeks ago, two weeks ago, that we had a circle at this price for it to collapse? Right? Do you remember this, guys? I measured the distance from this low to this high, and then I put it to what I call the neckline, and I projected out to that price. And then when we finally got to that price, right? So that's pretty reasonable accuracy, isn't it? Okay. So once again, the distance from here to here to the neckline is from here to here. Anyway, so la 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 la. So what does this mean? All right, well, if you're bull, you need to grow cautious because you're no longer doing things like higher high, higher low, higher high, higher low, higher high, higher high, higher low. We were supposed to get a higher high, didn't get it. So now at the very best, we're rangy. Okay, so the very best you can expect out of this on the short run for a bull is to the top of the range. Of course, the risk now is it does that. So that's where bears need to get in. You don't want to sell at support bears, but you want to sell a rally right into this roll reversal area, this little mini one, if I may zoom in so much to that level. Let me give it a couple of clicks. Okay. Let's do it like that. So that level, Or, so that'd be plan A. Plan B would be closer to here, top of that mini range, and then a break. Okay? But don't trade it like you're still trending. Okay? Because this high to this higher low was supposed to create a higher high, you need to adjust to changing market conditions. Now, it may still be bullish on the long run, but on the short run, bulls face risk. Okay? Another way of looking at it is there's no reason why this Aussie yen can't come all the way down here and then go up if you're a bull. There's no reason why that can't happen. Okay? You can see we're nowhere versus the long run. Okay? So this could just come back down and then basically create the double bottom at the projected monthly low. Nothing wrong with the double bottom at the projected monthly low before doing a turn to the upside. Okay? Also remember, Australia just got itself a new government. And there was some talk, at the Bank of Japan, there was some talk yesterday, nothing important, just babbling. But I wanted to show you, I was reading this morning, let's see, I was on do I still have it? Oh, here it is. Yeah, so I was on a Japanese government, oops, just lost it again. I was on a Japanese government website this morning. Yeah, I know, right? I don't know if you've seen this or not. Okay. My Japanese is no good, so I like to read it in English. Okay. Then I want economic statistics. And you scroll down to monthly economic reports. And then you got to go August 2018. This came out this morning. And then you can read their statement. Read it yourself! You know, but that's the kind of stuff you should be doing, right? Well, Peter says it still looks good on the 4 hour. Well, look, if it's going to roll over on a 1 hour, you're not going to see it for about 20 hours on your 4 hour. Maybe 24 hours, maybe 36 hours. So, you know, it's like saying, I don't see the pirate ship, Captain. Like, well, I'm using binoculars, bro. And I say we need to be worried, right? So anyways, I don't know. Anyways. Yeah, so you're going to see it sooner if you zoom in a little bit. Right? Right, Captain Cook? Don't call me Raymond in front of the men. Oh, I'm sorry, Captain Hook. Sorry, Captain Cook. Captain Cook, wasn't he the guy that discovered Sydney Harbor? The Cooks are a powerful family. Brooks getting paid, yeah. So anyways. Yeah. So there's that. That's the type of stuff you should be reading if you were going to be a well-read foreign exchange trader. Do you guys remember talking about the yield curve yesterday? And Raymond and the Cook Islands. Yes. Look at this. Reading Bloomberg this morning. Where Where does it say it? The term yield curve is now trending on Google searches around 8 a.m. Tuesday, yesterday. Well, that's when we were talking about it. Do we really have that kind of impact? Where analysts are noticing ginormous spikes in the things we talk about? What? The first fleet sailed up the coast looking for better anchorage. Oh, well, there you go, Chuck. Chuck B. Peace. Hello, can you go? Yeah. Next up, yeah, Pound Wayne. Yeah, anyways, isn't that funny? So, I don't know, the things you come across when you're doing your research. Is anybody going to try to find that economic report? See all the beautiful information released around the world for free? A government agency, a Japanese government agency releasing its monthly economic report. You're like, huh, maybe I should read that like every month. The interesting thing, because that would be fundamental analysis, right? Remember how I was saying news isn't fundamentals? A singularity in the price-time continuum, like a release of GDP or something. Well, that's not fundamentals. That's just news, right? But the interesting thing about it is the market, the global business realm is so interconnected now that if someone is analyzing the Japanese economy, they are in some degree, in somewhat reasonable degree, reporting on the entire global economy. Okay, so if the Japanese economy is slowing, it's because the global economy is not buying Japanese goods. So that means there's either a substitute, like they're buying Chinese goods, and I've been buying a lot of Chinese stuff lately, mostly because it's better than the stuff you can get in the United States now, like years ahead, which is a huge change, right? So if, so that could be one thing. Instead of people buying high-quality Sony products, they might be buying high-quality LG or Samsung products from South Korea, or maybe they're buying Xiaomi or something from China because it's better and maybe for now a little bit cheaper. So there might be a shift that way, that would be very bad for Japan specifically. If it's not that, if it's the fact that the rest of the world is not confident in economic conditions now or in the near future, then they just simply wouldn't be buying anything from Japan, China, or South Korea, or Taiwan. You know what I mean? So you can then say, well, okay, is this a Japanese situation or a global macro, right? So that's what that kind of information is. And when you're asking yourself these tougher questions, and you're doing some research to find the answers to these tougher questions, that's when you truly become a fundamental analyst. Okay. Oh, absolutely. And I had this actual conversation too 2 weeks ago. I was at a pool party at my friend's house, and one of his neighbors is Chinese, came over home probably 5 years ago now. And when they got here, they spoke, he spoke very sort of broken English, and his wife didn't speak any English. And they had young kids and all that kind of stuff. So anyways, more recently, I was just at this pool party, met him again, and we were talking about some of the projects he was working on. So the building that that I stayed in Hong Kong, actually Kowloon, is the tallest building in Hong Kong. And my friend, at this party, worked at the company that pumped the cement up, 150 stories up, which is, by the way, not an easy thing to do. That you have to invent new technology to be able to do it. But anyways, I had that conversation where I said, after World War II, after the United States nuked the Japanese, entire cities were gone, right? So it had to be rebuilt. So they got off the ground by basically providing labor much cheaper than the rest of the world, specifically the United States and Europe. So anyway, so for a while in the beginning, Japanese stuff was just junk, but the labor was cheaper. Well, over a decade or so, the stuff went from junk to better and better and better and better. And then suddenly Japanese labor wasn't cheap anymore, but the products were fantastic, right? And then what happened? Then there was a war in South Korea for a long time. So when that was done, we rebuilt South Korea in a capitalist economy and all that kind of stuff. And as we know, capitalism works. So it went from stuff from South Korea was junk, and then it got better and better and better and better. And you didn't. So now you don't get stuff made in South Korea for it to be cheap. You buy your stuff from South Korea because it's awesome, right? And then what? Taiwan rebuilt Taiwan, right? And then so made in Taiwan stuff was cheap, and then it got more expensive. And then what? China's next, right? And then China, made in China, used to be cheap stuff, plastic injection molded stuff at Walmart. But now I'm buying Chinese stuff because it's 5 years ahead of what I can buy in America. You know what I mean? It's 5 years ahead of what I can buy in America. It's way better. Now, it's not cheap. So I bought a movie projector. It was thousands of dollars. Now, I could have bought, some regular projector for, I don't know, $800. But no, I spent thousands. But I got the top of the line, highest quality, amazing technology that you could just never buy in the United States. I paid thousands and thousands of dollars and had it shipped over, right? And then the whole interface is in Chinese, so I had to download a patch and upload it to the projector to switch some of the menus to English. Now I'm even going out of my way, right, to use a Chinese product. But why would I do it? Not because it was cheaper. I've paid way more than I could have because it was significantly better. And that's another shift. So who's next? India? Okay. Okay. So, but that is economic history, right? That's the stuff I like quite a bit. So there's a big demographic shift going on in Japan, as you know, everyone's getting older. But in China, they had the one-child policy for a long time. And now, people, entire generations have been born and raised in the city now, not migrating in from the farmers' fields, right? So now we have young, smart, highly educated, highly technical, advanced, workers that live in expensive apartment buildings, want to drive expensive cars, wear fancy watches and all this kind of stuff. And their wages are way up. So from today, let's say over the next 10, 15 years, wages are going to be very high, I think, in China, and China will not be cheap. And just like we buy a Samsung or an LG without any problems now, like Samsung washer and dryer, Samsung refrigerator, right? Samsung phone, Samsung whatever, you know, all of a sudden, I'm like, but all of this stuff is, it used to be GE. Where's GE now? It used to be the largest company in the world. Oh yeah, it went out of business. Yeah, Ron says LG used to be junk and, you know, that kind of stuff, and right? Right? So anyways, I love economic history because it helps you predict the future. Okay? Plus, I'm much less good looking than I used to be, so I need to impress people somehow. They're like, Wayne, yeah, he used to be pretty, but his economic history is like out of this world. Right? So anyways, let's get back to this. So Kitty Cat, Oscar Mike on the move, right? And then what? We hit the weekly target. So this is where you're supposed to stop trading to the sell side. So you remember, this is the front one, sell Friday. This is the sell on Monday. And on Tuesday, I'm not sure, how many hours ago? Anyways, I'm sure we talked about this yesterday. This green zone is the conservative place to take your profit. Now, it went a little farther, and I don't care. And you can see it's actually playing off the monthlies, right? That's cool. And we do have a target for a little bit lower. But, yeah, I don't know. There's other things going on here that you may not see. All right, Euro buck. Let's get on to the hourly, I guess. What do you think of this price action? We're doing good on this, huh? Isn't that pretty? Look at this, up, 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 breakout. Right? Roll reversal, just gorgeous. Working our way up. And I have this huge circle and this huge gray line and added an orange line. Let me move this. You see this? I have this. I have this gray area. I have this huge circle. What do you think it means? Can't grab the circle, so there's too much going on here. What do you think it means? Should I be worried about this area? Huh? What does that mean? Should I be done for now? So I might have drawn that for the swing group on Friday. So I'll talk it out loud. This is an obvious swing entry for front running. The obvious target for that is this red zone. But then if you layer this a little bit more, there's definitely something going on here. The top of this old range. And then there's a monthly pivot, which, let me move this, okay? There's a monthly pivot there, which we started August, okay? Then we're back to that area. And we're only a shake of a lamb's tail away from the actual weekly target that this would have predicted. But what I suggested on Friday, so what is it now, Wednesday? That if you did get this entry and you did take it and you did rally it up, and especially if you got that close to this target on a Tuesday, if I were me, I'd just be done. Can anybody confirm that conversation? I think it was Friday, not Monday. Anybody? Bueller? Okay. My point isn't being right. My point is that when you're right, you tend to get very confident. Okay. And it's hard to stay conservative. You need to be beaten down like a dirty dog like 1,000 times, and pretty soon you just whimper. Every time you get near risk, you whimper. That's kind of what you need to be. You don't want to be the tough guy. So in this case, you're all the way here, and I suggest you just be done, take a profit and run. Okay. What are the major reasons for this? Because you could say, well, Wayne, what about the 4 hour 21 here? Shouldn't I buy? What about this roll reversal? What about the retracement back to the bottom of the range? Shouldn't I just buy this, Wayne? Shouldn't I just buy this? Shouldn't it just go? Blah, blah, blah. And there's so much noise going on there. What is the plan? The plan actually was to buy this Friday, so you would have started Monday already profitable, right? Monday rallies up, and you get basically into where my confluence of resistance lives. I'm trying to teach you how to be conservative and disciplined. I mean, you got about 85% of the predicted move here, maybe 95% of the predicted move. The difference between this and that is it's only like 20 pips. Okay? It's nothing. But what happens if you get to, let's say, resistance, solid, hardcore resistance? Now, typically it's a profit zone, but let's say you get to predictable hardcore resistance on a Tuesday, set up with a Friday front run. What's the next thing that is quite probably going to happen? What can you anticipate to happen in that situation? A counter trend. So you see how in these market conditions I say, well, sometimes you can be a tough guy and hang on and ride this up further. But if you can pretty much predict there's a potential counter trend, you might be a tough guy, but you might not be a smart guy, right? A smart gal, in this case, is much more important than being a tough guy. So a smart girl would take her money and run, right? So, yeah, so you could try to rally it up off of this or this. I mean, this is a buy zone. I would adjust it so it looks more like this right now. Okay, so you could do that. But you don't need to. So what are we now at 50? So this is like 75 pips ago you should have been out. Okay? 70 pips is a lot. Okay? Isn't it? Okay, so like I got you into a 200 pip move since Friday. So to give up 75 pips of a 200 pip move because you're stubborn, I don't know. I don't think it's cool, do you? Now, right, Ross brings up the let your winners run. Yeah, but that doesn't mean ignore risk or don't manage your stops, right? Looking at it this way, do we really have an uptrend? And I would argue no. So if we were in an uptrend, then I probably would just let it run and not adjust that, okay? In this case, we're just challenging the resistance, and we don't truly have a breakout yet. What I'm trying to get to is we're probably a couple of weeks, three weeks early. And the time to be tough is entering here when you were supposed to, right? We're entering here when you were supposed to. So there's the last 2 weeks, guys. This Friday was a long entry. Last Friday was a long entry. You know, that's 250 pips here and 250 pips there. That's the tough guy stuff, right? That's when you're supposed to be tough. Tough on your entries, but not tough on your exits, right? Not getting out, I would actually argue, is the wimpy thing to do, right? So the tough thing is to take your profit where you're likely to give back pips, especially if it's so predictable. I mean, look at 1, 2, 3 different things. I guess even this, 4 different things highlighting the fact that that's probably going to be resistance. Okay. Pharaoh says, I don't think Euro USD will get past 118. See, I don't even think like that anymore. Who cares, right? And so I'm trying to get you to not think that way, Pharaoh, because that's a guess, and it's not going to be helpful in the long run. So I'd rather you say, you know, you're a bear on this or you're a bull. So if you're a bear, like you don't think it's going to get above 118, how about you say something like, all right, if I can see a double top below 118, I'm going to start selling rallies. Okay? Which, there's this idea of like just saying, I don't think. You want to remove that from your vernacular, right? If you were speaking to a professional investor, you're like, well, I don't think I'll lose all your money. No, you have to instead talk about the inherent risks, the potential risks, the unlikely risks, but you can be certain about the risks you're facing versus I don't think we'll lose your money, right? Well, I certainly am concerned about these risks, and we've addressed these risks, and you know, so just the language, I don't think. I'd rather you say, if we see a double top near 118, we will start selling. Okay? I know it's a little thing, Pharaoh, right? But put it this right. You know, if we were working in an office together or something, we would have to train each other to remove that language from the office, because then it creeps into all kinds of things psychologically. You trade like that. You know, we don't want that thought process or training. So, you know, we would call that out. You'd have to do, I don't know, 10 push-ups or something every time you say, you know, I don't think, or I hope, right? I hope this goes up to 118. Boom. Come on, 10 push-ups now. There's no hope in this office. Okay. Pig dog, just kind of whimpering around, not doing much. No Brexit deal in sight. Except they'll agree to something on the very last day. What do you guys think about that? Yeah, never underestimate the ability for European politicians to ruin things. All right. They'll come up with a bad deal. Yeah, well, Maze, yeah, she's busy in Africa. You know, like that's needed now, right? I know you're going to hate it, but maybe the British people, the good people of Britain, England, and Britain, Great Britain, the good people of Great Britain perhaps should hire Trump to negotiate Brexit for them. And I think he'd be happy to do it. Greatest deal ever! Okay. So you basically have to commit here to this rallying up or not rallying up. Not rallying up doesn't give you a true conservative entry. You might treat this last drop as a lower low, lower high. Yeah, you could, especially on like a 15-minute chart. You would have it fib this way. That's a pretty straightforward trade. So any bear would have taken that by now. But the concern with that longer term is that we clearly haven't made this lower low yet. Okay? You see that? So, yeah. You really have to be careful. There are still bulls in this market. But the shorter term, you can see, you know, that's clearly a low lower than this, right? So selling at 382 ain't the worst thing in the world, especially if you're already a bear. You're going to look at this as a rollover. I'd be careful. So there was a currency pair a week or two ago, or maybe it was even gold. We had a reverse fib. Do you guys remember that? I said we were in fib wars. Maybe it was this. Sellers were selling and buyers were buying at the same time, and I said kind of just ignore that. No, it's not a crown pattern. No, it's not. First of all, if this was a crown pattern, it would have to be above an uptrend, and there's no uptrend here. If it were to be at the bottom of a downtrend, it'd have to be inverse. So absolutely, totally not in any way. WTI? WTF. Man, it's golden. Okay. La, la, la. All right. So bulls had this open out of position. So how does a bull buy a trade? How does a bull buy in an overbought market? Hour 21. So maybe, just maybe, this holds, right? Now the scary part is bears have absolute total permission to sell up here. Okay. But why be a bear? Gee whiz. Rotten cold. Okay. Okay. Let's finish the yens. Okay, we did Aussie, so let's do Beast. No technical entry here, but once again, you can kick off the 4-hour 21, which we talked about on Monday. It's now Wednesday. You see how we're still holding above the 4-hour 21? You're welcome. The only thing you had to do was be a bull. Everything else I think is really easy. We predicted the double bottom, got the double bottom. This is an obvious swing long for bulls off of a double bottom. Hit the target, like to the pip, on the very last hour of the last day. And then has been riding the 4-hour 21 since, which is also pretty straightforward buying. They're not swings because they're late in the week, right? You're late in the game, basically, but still, it's moving along as we completely, without a shadow of a doubt, predicted in multiple ways. And the pound is not even a good trade. Take a look at Kitty Cat. I think this one was harder. It was a beautiful sell on the first day of August, fulfilled itself on the 14th day, and then counter-trended back to the central, which it was supposed to do, and then dropped in here and consolidated. And I mean, look, we have it going up. That's not the issue. Look at this, though, by the way, guys. Isn't that pretty? This, right, well, predicts this, right? Isn't that pretty? Right? Perfect buy zone. The target was here, which I have at 86. We're at 86 right this second. Is that amazing? Beautiful. It's actually just fulfillment of last week's trade. Raymond says this was his first successful trade with the trade group. Have you had many unsuccessful trades, Raymond? Raymond went quiet. Well, Luis, right? Luis Garcia says you're starting to do really well with the yen trades. Remember, it's seasonal. Raven says not really. All right, cool. It's seasonal, so don't get overly confident. It's just seasonal. And I did tell you these were going to go up 40 weeks ago, and I told you the specific week in which they were going to go up, right? So, you know, right? Is it the wizard or is it the wand? Right? Yeah, I think I'm going to stop covering this Swiss yen. I mean, it's moving, but it's not something I actually want to trade. I don't want it to do this. And it's moved so well, but I don't want to cover it anymore. I'm wondering what we should put there. I guess one thing we could do is this one. What happened with my Swiss yen? So it's not a yen, but I want to talk about it. Okay, we're getting close, bro. Maybe we should cover it this way. Yeah, day trading is fine, Raymond. You just will never get filthy stinking rich. All right. Wow, look at how some of this moved. Holy smokes. Well, that's interesting. Let's clearly we've done some analysis here, huh? You guys remember this? Do you remember why this has 2 and this only has 1? Because we did this on the first day of last month. So I said if you were a bull, you'd buy it here and it would go up. But I'm not a bull, am I? I'm a bear. So I said in that case, you would sell here or here. This is days, weeks. This is weeks before it happened. Like that I said, if it went here, you'd sell it. Look, it fell a lot. Didn't get to our target, but boy, did it hold. Right? Again, this top here I drew a week and a half earlier. Look how close I got. It's not bad for a week and a half in advance. Okay, but I don't want to buy it. So here's what I'm telling you here. I don't want to buy this bear, especially on the first day of the month. But I never want to buy this. So is this a place to sell? No. So what I'm trying to explain here, and actually, you know what? You see how these are off a little bit? Pivots? I did this before August. I did this in July because these pivots hadn't set yet. I did this over here. So anyways, no, I wouldn't want to sell here. I actually want to sell high. So I would sell at the central or this M3, which at that time was here. How interesting. And look how it went up and then collapsed just like we had it. Cool. That's very interesting. So anyways, moving to now, right? Moving to now, I only want to sell this. I only want to sell this between now and Friday. Okay? Monday, no good. Today, yeah, all right. You know, sure. I'm not too excited about today, but it could be today. But I'm looking to sell. Makes it a lot easier to know what you want before you even look, right? So I could sell here, don't you think? See, I want to get short between now and Friday, somewhere in that gray box. Okay, that's all I know. So now, on a smaller time frame, I need technical reasons. So this is a fundamental flow play. Has nothing to do with technical analysis. To make the decision has nothing to do with technical analysis. Then I'm using technical analysis. I open my 4-hour chart. Be the daily, I don't care. Daily chart, whatever, I don't care. And I look at it and I pick my prices. I'd like to sell in there. Okay? And I know I want to do it between now and Friday. Less than 72-hour window. And very specific pricing here. Between 119, basically 119 to 119 and a quarter. Very specific, right? So now I use technical analysis and I say, all right, how about a lower low, lower high? What if I got something like this? Then I can sell it here, put my stop there. Okay. So in this case, maybe it comes down, tests 119, one more time, false rally, collapse. Or even better, this would be way better. A significant drop below 119, a retracement back to 119, and a sell off of a role reversal. That would be like taking candy from a baby if this occurred. Capiche? Oh, sorry. Yeah, I thought you saw me drag the pair onto this chart. You can also see here, and you can also see here, and you should also be able to see here, but maybe just it's too small on your resolution. This template didn't have the oh yeah. Yeah, I'm just monkeying around different layouts. I'll adjust. And typically this is up here and in the background. Okay. I mean, I guess I can just change the template. See how this even trades quite well using swings? Beautiful. Okay, why don't we call it a day? Please leave a like. Make sure you subscribe to the YouTube channel so when I do these, you get notified and brought directly to the live webinar. Also, when I upload videos, which I do on a regular basis, you'll also be notified. Thank you for being a client of tradersway.com. We appreciate you. If you're new to these webinars, please consider visiting the site and signing up for a demo account. And, I will be here every day of the week, Monday through Friday, I should say more specifically. Monday, I should remind you, is a holiday in the United States of America, so there will not be a webinar that day. I will be in my exotic dancing class. Exotic dancing never takes holidays. Yeah. So thank you for being on my team every day. I really do appreciate the effort that you put into trading. It's nice to be surrounded by like-minded people. Actually, Harvard has a bartender course. I was thinking about taking that. Cool. Well, I'm glad to see you every day, guys, and I'm glad that it helps. So I'll see you again tomorrow. Have a wonderful day.